Disability insurance offers you protection for one of your most valuable assets, your ability to earn an income. This type of coverage replaces a substantial amount of your regular paycheck in the event you become injured or disabled, and unable to work. We caught up with our insurance expert, Diarmuid Shiels, to find out exactly how disability insurance works in Canada.
So another type of misunderstood coverage, I think I observe from just people's searches and how they get on the site is disability insurance, and definitely people wondering whether they need their own policy or not. Could you tell me a little bit about the disability insurance that we offer?
Yeah, so standalone disability insurance plans are far more comprehensive than if somebody has one with their employer. And a lot of people are unaware on their employer group plans. They just assume because they have disability insurance there that they're covered for themselves if they suffer a long-term disability. And that can sometimes not be the case. They can certainly be covered for a long-term disability, but the period or the benefit period on that policy could be quite shorter than they expected. Particularly if someone's very young and in their maybe young financial years or just starting out in their career and they're in their early 30s, for example, they obviously have a lot more employment years ahead of them. And if they were to suffer like a physical injury or a mental ailment or a critical illness that prevented them from working for a long period of time, if they were to suffer that, they may only be covered for their receiving their replacement income for a period of up to 2 years. On the flip side to that, if you had a standalone plan, you could have a benefit period for 5 years or all the way up to 65 as an example. So it can offer a far more comprehensive package.
How do people determine how much coverage they need if they are getting their own policy?
Yeah, so with disability insurance, it's essentially a replacement income policy. So based on your gross income, that will determine the maximum amount of coverage that you can apply for. However, you don't have to apply for that maximum coverage. That's just a ceiling to what you can apply for at that given point in time. So it really just comes down to a person just assessing their own need, how much money they would need to support themselves and their family if they were to suffer a disability or go on to disability claim. So it would mainly come down to their lifestyle requirements, if they have an outstanding mortgage or young dependents, how much of a budget they would need each month to support themselves, and that would be a good starting point.
So Diarmuid, is there anything that disability insurance doesn't cover that some people might think it does?
Yeah, like one common misconception I come across when I'm having the conversation with clients who are looking for an overall insurance package, they sometimes misinterpret the difference between critical illness and disability insurance. And disability insurance being an income replacement policy, it gives you a monthly income. So if it's $2,000, $3,000, $4,000 per month versus a critical illness policy that gives you one lump sum tax-free payment. A lot of clients would assume that if they have a disability policy, they have this in their mind that they would receive a large chunk of money at any given point in time if they were to receive a claim amount, whether it be $50,000 or $100,000. And that's simply not the case. It's whatever your benefit amount is per month, which is a much lower amount than if you were to receive a tax-free lump sum payment on a critical illness policy.
Sometimes I see, in policy documents and things like that, that there's the ability to add a disability rider. Is that the same as disability insurance, or is that something different altogether?
Yeah, it's certainly an option with some insurance companies, but it's a completely different product in terms of with how a standalone policy is so much more comprehensive. Like with the disability riders, they are great, but if you have a short-term insurance policy, it may only be for 10, 15 or 20 years. If you're very young, that policy is obviously going to expire before you've reached into. So certainly with a standalone comprehensive plan, it can cover you for your entire working years that are ahead of you until retirement age. So that would be the main disadvantage to a disability rider. And of course, with the disability rider, the benefit period may be much shorter as well. You may only have it for a couple of years.
So lots of like workplace benefits packages do include some sort of like disability insurance or benefit. So if you have coverage through work, like why not just stick with that? Why get yourself an independent policy?
Yeah, like coverage to work can be great in some cases, but in the majority of cases, a lot of clients don't realize that the disability plans they have through work are quite limited in terms of the benefit period. Just from reading like employer group plans and assessing clients' needs, one thing that I have noticed is that the benefit period can be as low as 2 years. A lot of people are not aware of that, particularly if you're a young client or if you're in your early 30s or maybe even in your 40s. Your benefit period may be as short as 2 years from what I've seen. Comparing that to a standalone plan, you could have a much longer benefit period. Should you go on disability claim, you could receive a benefit period for maybe 5 years or all the way up to 65, which is far more comprehensive. Another misconception as well is that a lot of clients don't realize that their definition of disability can often change too on employer group plans. Just because you have a long benefit period, the definition of disability can change as well. You could go from having a definition of regular occupation, which means you're now unable to do the job you're trained and qualified for. So if you are unable to do that, you would receive your benefit amount. After 2 years, that definition can often change to what's called any occupation. So in order to continue receiving your benefit, you would then need to satisfy that definition, would mean you're unable to do any occupation whatsoever. That's the general sort of provisions and wordings that I see on employer group plans. You can better protect yourself on a standalone plan by locking in a regular occupation definition all the way to 65. The cost might be a little bit higher, but in the long run, you're protecting you and your family a lot more.
Right.
Mm-hmm.
And then, you pay like CPP benefits on your pay stub every month or every 2 weeks or however however you're paid. And that's supposed to go to sort of a disability insurance scheme as well. How come you wouldn't just choose to, enact your, say, government disability benefit?
Yeah, that's a good point as well. With the CPP coverage, if a person was to go on to disability claim and they did receive that amount, you will notice that the amount is very, very low. It wouldn't be enough to cover, general costs that are associated with yourself or supporting a family, like if there's mortgage costs or income replacement costs or just, general lifestyle needs. You'll find the CPP coverage will not even cover a fraction of that. So that's why it would be more advisable to have a standalone plan, because you can cover a larger percentage of your income should you suffer a disability and need to go on disability claim. So it's far more comprehensive to have your own standalone plan to help protect you and your family.